India.
Hi, welcome back. As promised, we're now going to talk about the commodity space. Manisha Gupta, commodities editor, joins in with a roundup of all the action there. Hi, Manisha. Afternoon. What all are you picking up today?
Well, as in other asset classes, this asset class also is looking at very high volatility. The gold prices, after hitting record highs and the 7-year highs, have seen some profit taking today. And on the other side, when you look at the industrial commodities, which were down and out yesterday, have seen some value buying. While the coronavirus is still an uncertainty out there, and the market seem to be reacting to on a daily basis onto that one. But we have seen gold prices taking way more fundamentals than just that. The global central bank buying, the ETF buying, the easy monetary policy, the slower economic growth, all of those factors have been supportive as well. And until the time we continue to hold around that 1650 mark, that is the level that you saw a lot of short covering and fresh buying coming in from gold funds and other hedge funds, is the level that the markets now are keeping an eye on. Kunal Shah of Nirmal Bang now joins us. Kunal, hi. What is your sense on gold prices? After 5 days of constant record highs, we've seen some correction today. How are you making use of these levels?
I think it's just a profit taking in gold. What we are witnessing, we've seen a humongous rise of 2,500 rupees. So almost we can see 5.5% upside. What we've seen generally, this kind of movement we see in a matter of 3 to 5 months, but it has just taken place in 2.5 weeks. So a tad lower what we are expecting for today's session, 40 to 200 to maximum 42,000. We are not very bearish right now. It's just the breather. What we've seen, the number of cases in China have gone down, so expectation of stability, but the economic reality is definitely going to be weak going forward, especially for China, South Korea, because of the onset of this virus. I think just the profit taking is expected today, so we'll be on a selling side for the day.
How are you looking at the metal prices then? Because we've seen some buying come back for metals like nickel. Zinc continues to see a bit of a pressure. But nickel, I mean, that essentially because 1.5% of gains for a second straight day there.
Nickel is the only commodity in the base metal complex which is still going to show 2.5% of demand growth even for the year 2020. So this commodity is likely to remain under the buying interest. Whenever it goes down, you are going to see buying will resume in. So I expect the upside to continue in nickel, and it can test levels of 955 to 960.
How are you looking at the crude oil prices? Because 5% decline intraday yesterday, and some buying back in yet again. Value buying here as well, and what fundamentals would you watch here?
Fundamental continues to remain weak, but at the same time we've seen a sharp decline in oil prices, and we are sensing some bit of stability in the global markets today. So in line with that, some risk appetite is seen in the market, and because of that, crude oil prices can test levels of 3750 to 3760 on MCX. So a bit of bargain buying can take place today, but the trend is definitely weak going forward.
And how are you looking at the natural gas prices? Because we've seen further declines on that.
Natural gas, there is a glut basically building in US. The US winter has been disappointing. So we tracked the US Henry Hub natural gas prices, and because there was no sharp, every winter from last 4 years, we see a 20-25 days of period where the cold is more than expected. But this time it has been warmer weather. Warmer winter in the US, and that's the main reason why natural gas prices are underperforming. And also there is a record US natural gas production, so higher production coupled with the slower demand growth is definitely weak for the natural gas prices.
Okay, all right. Thanks so much for that, Kunal, as well as Manisha. Well, just keep an eye out on a couple of stocks in the broader markets. India Bulls Housing Finance, I don't know what's going on there, but that stock was sitting in the green with a gain of from 2.5% odd. The intraday chart will tell you the picture. That stock is coming for some big selling. Now it's falling on large volumes. And MSTC as well, the stock is up nearly around 50% in the last month or so. So you pull up the intraday chart first. When we started the show, the stock was locked in upper circuit. And now just take a look at that sharp decline that we've seen on that stock. It's off nearly around 10% from the high point of the day. But the last 1 month chart as well should come up for you. That's telling you the kind of gains you've seen out there. Nearly around a 50% gains is what we've seen on that counter. A good time to get you some global opinion now. Earlier today, we spoke to James Glassman, of JP Morgan Chase, and he says that he believes the current coronavirus scare will be transitory in nature, and also adds that global markets will see a strong bounce back. Let's listen in.
I think the disruptions to the supply chains probably does ripple throughout the Asian region, but this is going to be very transitory because, I mean, China already is getting back to work. They're not. It's going to take a few more weeks, I think, before they get back to something more normal. But I think this is a first quarter phenomenon, and as my colleagues in China believe, we'll have a very weak first quarter outcome, but then we'll have a big, strong rebound. And I think for economists, when we think about the year as a whole, I see no change in views about the global economy compared with where we were a couple months ago. So this is not anything that makes sense to economists. It's just basically purely based on fear, and we know that it's going to be transitory. The big fear today was, well, it's showing up in India and Iran. Maybe it's spreading more broadly than we thought. China may have a control of it, but maybe not. But I think this makes no sense to me as an economist, because I don't think it changes the fundamental picture. When you get to the spring and the summer, this is all going to be in the rearview mirror.
Okay, so that's James Glassman of JP Morgan Chase saying that this is just a transitory impact that the coronavirus issue is going to have. He doesn't see this as having any long-term impact on the global economy. But there's definitely panic in global stock markets over the virus outbreak, and that led to gold surging to 7-year highs as pandemic fears have sparked a safe haven rush. Earlier today, we spoke with David Lennox, the analyst at Fat Profits, and he believes that gold prices will soon hit $1,700 per ounce. Listen in.
It's the fear that the market suddenly took hold of, that not only was the coronavirus in China, but as they had said, it's also in Japan, it's also in South Korea, there's also a cluster in Italy. So if one person can escape from China and spread it to these clusters, the market really got fearsome that perhaps we will see other clusters coming up in other countries, and hence we did see the gold price really just about penetrate that $1,700 an ounce region, which we haven't seen for so long. At this point in time, we wouldn't be readily buying into the gold markets. We do think, as I've already said, we've seen that peak up in the 1690 regions. We would see all support levels and all resistance levels being taken away. So we would be looking for fresh support to be built up, probably back at around that 1655 region US. We do believe that that's a realistic number in terms of where we know the coronavirus stands at today, and we will see that support build up there. As I said, what happens beyond, we're going to be watching the release of those coronavirus numbers in terms of incidences and countries' involvement, and that could then use that support to breach through 1700 should it worsen.
Okay, with that, it is a wrap on this edition of the show. Thanks so much for tuning in, but don't go anywhere. Business Lunch in just a bit.
Brought to you by Kotak Mutual Fund.